the insider owns a whopping 70% of this company. It means they will surely try their best to deliver the best outcome for the shareholders.
Till I can't no more. I got the horses in the bag.
Hi everyone, welcome to Investing Maniac. Terry here. When you see the title, you must be thinking,
Hey Terry, now there's a war, inflation rate is so high, interest rate is rising, US government is deploying QT. Are you out of your mind to even suggest a stock to buy now?
what if I tell you now is exactly the time that you should buy stocks? Warren Buffett Coco said, be fearful when others are greedy, and be greedy when others are fearful. And now is the best time to be greedy because most of the people are fearful. Fear causes irrational behavior in the stock market, and irrational behavior creates buying chance. Today, I will share with you 5 stocks that are undervalued in my opinion, and whether all these companies can pass the quantitative criteria. Before we continue, please help me to smash the like button and subscribe to my channel if you would like to see more investment and side hustle related videos. Today's video is sponsored by Webull. If you sign up a Webull account from now till 30th September 2022, you will get free $130 worth of Tesla share. What you have to do is just to make and maintain an initial funding of 2,000 Sing dollar, execute one buy trade of either stocks or ETF on the US market, and execute one more buy trade of options on the US market within 30 days. Besides, Webull also provides zero commission rate for US stocks, options, and ETF trading. You can even buy fractional share in Webull and set recurring buy on the stocks you want to purchase. If you are interested to get a 9% ROI in 1 month, you can use the sign up link in the description below. The first stock we'll be talking about today is Citigroup, ticker C. Citigroup is an American multinational investment bank and financial services corporation headquartered in New York City. The main revenue composition of Citigroup is 61.05% on institutional clients group and 38.02% on global consumer banking. Its revenue is mainly generated in North America, Asia, Europe, Middle East, Africa, and Latin America. Citigroup's market cap is 95 billions. The stock is trading at around $49 currently, down from 52-week high of $73.72. In terms of our QC score, Citigroup only scored 5 out of 12. The sales have been declining for the past 5 years. Return on assets and equity are not great. The quick ratio is 0.5, which means they have much lesser liquid assets like cash, cash equivalents, and account receivables than their current liabilities. Their debts are higher than their equity too. Hey, why you recommend me such a lousy stock? Wait, don't judge too fast yet. Since Citigroup elevated John Fraser to take over as CEO in early 2021, they have been having some refreshing plans such as selling their international consumer banking operations in 13 countries and double down in their areas of strength. This hard decision may be the right one to let Citigroup to make a turnaround, and this could be what triggered Warren Buffett to buy Citigroup stocks during first quarter 2022. The analyst recommended rating for Citigroup is 2.4, which is a buy and an average price target of $61.27 indicates a 25% increase from the current price. The intrinsic value that I calculated using discounting cash flow method with 25% margin of safety is $72. Jita app also gave it a score of 5.17 out of 10, and its current price is trading under the Jita line by 28.17%. Besides, high interest rate environment has always been good for banks to generate more income, and for a stock that is trading at 0.475 price to book ratio and paying a 4.18% annual dividend, I would say this is a screaming buy. The second stock that we will talk about today is PEM Transportation Services Inc., ticker PTSI. PEM Transportation is a truckload transportation and logistics company that is based in Tontitown, Arkansas. The main revenue composition of PEM is 90.69% from trucking and 9.31% from fuel surcharge. Its revenue is mainly generated in the US and Mexico. PEM's market cap is $661 million. The stock is trading at around $29 currently, down from the 52-week high of $40.88. PEM Transportation has a QC score of 12 out of 12. The things to note here is they have quite a decent EPS growth over the past 5 years, and they are managing their debt usage quite well too. The analyst recommended rating for PEM Transportation is 3, which is a hold, and an average price target of $40 indicates a 35% increase from the current price. The intrinsic value that I calculated using DCF method with 25% margin of safety is $39.35. Jita app also gave it a score of 6.5 out of 10, and its current price is trading under the Jita line by 65.67%. What I like about PEM Transportation is about their integrity. Their CEO pay is only 1.5 million as compared to the median of 4 million pay to CEO of other companies within the same market cap range. Besides, the insider owns a whopping 70% of this company. It means they will surely try their best to deliver the best outcome for the shareholders. The third stock today is MKS Instrument, ticker MKSI. MKS Instrument is a global provider of instruments, systems, and process control of vacuum and photonic solution headquartered in Andover, Massachusetts. They are more to a B2B business model with customers like Applied Materials and Lam Research. The main revenue composition of MKS is 63.11% from Vacuum Solutions Division and 27.58% from Photonic Solution Division. Its revenue is mainly derived from North America, South Korea, China, and other Asia countries. MKS market cap is 6.62 billion. The stock is trading at around $100 now, down from the 52-week high of $181.03. MKS Instrument has a QC score of 12 out of 12. The things to note here is their high EPS growth. They have much cash or cash equivalent on hand and a super low debt. The analyst recommended rating for MKS Instrument is 1.9, which is a buy, and an average price target of $158.20 indicates a 59% increase from the current price. The intrinsic value that I calculated using DCF method with 25% margin of safety is $159.20. Jita app also gave it a score of 6.77 out of 10, and its current price is trading under the Jita line by 52.49%. MKS also has a score of 96 out of 100 on Guru Focus website, which indicates the highest outperformance potential. With the consistently increasing revenue and free cash flow, MKS Instrument definitely worth to be in your watch list. The fourth stock today is Qorvo, ticker QRVO. Qorvo is a semiconductor company that designs, manufactures, and supplies radio frequency systems headquartered in Greensboro, North Carolina. Its main revenue composition is 76.31% in mobile products and 23.69% in infrastructure and defense products, and those revenue are mainly derived from US, China, and other Asia. Qorvo's market cap is 9.27 billion. The stock is trading at around $88, down from the 52-week high of $188.03. Qorvo has a QC score of 12 out of 12. They have a super growth rate in the past 5 years. They have quite some cash to spare, and they also have a healthy debt to equity ratio. The analyst recommended rating for Qorvo is 2.7, in between buy and hold, and an average price of $125.52 indicates a 40% increase from the current price. The intrinsic value that I calculated using the DCF method with 25% margin of safety is $100.91. Jita app also gave it a score of 7.1 out of 10, and its current price is trading under the Jita line by 47.41%. Qorvo is one of the suppliers of Apple and Samsung, and they have more than doubled their revenue with Samsung year over year in the recent quarters. Although the reduced handphone shipment and semiconductor company cyclical downtrend would affect Qorvo's near-term performance, but a forecasted increase in 5G smartphone shipments will tell you that the slowdown in Qorvo's growth is only temporary. The fifth stock today is Alphabet Inc., the parent of Google, ticker GOOGL. Alphabet Inc. provides various products and platforms and is headquartered in Mountain View, California. Being the consistent dominator of the world's #1 and #2 search engine, Google.com and YouTube, I believe no one don't know about them, right? Its main revenue composition is 92.2% from all Google services they provide and 7.45% from Google Cloud. And this revenue mainly comes from the US, Europe, Middle East, Africa, and Asia Pacific. Alphabet's market cap is 1.42 trillion. The stock is trading at around $108 after the recent 20-to-1 stock split and down from the 52-week high of $151.55. Alphabet has a QC score of 11 out of 12, but the current PE ratio of 20.13 is actually below its median of 26.97 over the past 10 years, and it is very close to its 5-year low of 19.71. It also has an amazing growth for such a big cap company, and their debt to equity ratio is almost near to zero. The analyst recommended rating for Alphabet is 1.8, which is a buy, and an average price of $144.74 indicates a 33.74% increase from the current price. The intrinsic value that I calculated using the DCF method with 25% margin of safety is $109.22. Jita app also gave it a score of 7.63 out of 10 and its current price is trading under the Jita line by 12.62%. Google has always been in my watch list because it is a well-known brand that I use every day. I'm also amazed by its high growth rate, ever-increasing revenue, free cash flow, and earnings per share. And they always have an eye for the future mega trend. So I'm not so worried even if Google Cloud segment is making losses now. So these are the 5 stocks to put into your watch list now. Or do you have any other favorite stocks in mind that you would like me to review? You may comment down below or contact us via our Telegram channel and group. That's all for today. Thank you so much for watching. I'll see you next time.